Hello everybody, the Teen Investor here. Today we are doing a video on the stock market for beginners. Basically, it's going to be step-by-step instructions on pretty much four things. It's going to be about what is the stock market, how to get started, the common mistakes, and how to avoid these mistakes. So let's get right into it and sit back and let's learn a little bit about investing. Alright, so what is the stock market? So basically what the stock market is in general is just that anyone like you and me can put money towards a public company, and in certain situations these public companies will give money back to you in certain situations, and these situations are called dividends. Now what a dividend is a part of a company's earnings that they distribute to their shareholders at a certain date. So these can be three different types. They can be quarterly, semi-annually, or annually. Basically, quarterly is every 3 months, semi-annually is every 6 months, so twice a year, and annually is every year. Now, two things to note is that not all companies do this. So there are certain companies that do participate in dividends and others that don't. So this is something that you have to check out when you're looking through your company of choice. And a major issue that a lot of people don't understand is that they're not forced to pay it out. So let's say someone, or a company, has a dividend rate of 5%, meaning that they will pay out 5% of the current market price of their share out in dividends every year. Well, they're not forced to pay it out, so you shouldn't be relying on this as an income source. It usually does happen, and you have to look into the company's history to see if they usually pay out their dividends, to see if it is as reliable as you thought it was. Now, the first step is that you have to open a brokerage account. So there are tons of different companies you can do this with, or banks you can do this with. There's TD, there's E-Trade, there's even an app called Robinhood that doesn't charge you any fees, but I'm not too sure about their customer service though, so just check that out before entering in any situation. But the thing about Robinhood is that they don't charge any fees, and usually other brokerages charge between $5 and $10 fee per trade. So when you buy it, it's $10, and when you sell it, it's $10. So when you're working with smaller amounts of money, you may be willing to engage in Robinhood rather than another brokerage. And second thing you want to do is track a few stocks. So you can use a few of these resources to help you. There's CNBC, Yahoo Finance, Stocks Tracker, which is an app you can download on your phone. Then there's the actual stocks app that comes with any Apple device. And then there's the investor relations pages for every company. Now, what is an investor relations page? So basically, an investor relations page is a page in which the company shows all their financials and their positions. So basically, how to find this is that you have to type in the company name followed by investor relations into your browser. So like Google or whatever, just type in that, and then it should come up, and you can see the 10Ks and 10Qs. Pretty much what those are annually and quarterly reports in which they tell you, you as the investor or shareholder, their financials. So basically all their assets, liabilities. You see how much profit they made in the quarter or in the year, and these are all interesting things to look at when you're looking into a company, and they are very necessary when investing for the long term to fully understand your business. Now, you're going to want to start off by investing a small amount of money. So pretty much you have to know these two things. You have to know the ticker symbol, and you have to know how to actually buy through your brokerage. So how to buy. Number one, you have to type in the ticker symbol. So all kinds of different companies have different ticker symbols. So let's say you're looking at Apple, it's AAPL. Let's say you're looking at all kinds of companies, there's always different things. Coca-Cola is KO. If you're looking at IBM, it's IBM. There's all kinds of different things, and those you have to just look up the actual stock, and it's going to tell you in brackets what the ticker symbol is. Number two is you're going to choose buy as a type. So there's going to be buy or sell. You're going to choose buy since you want to buy the actual stock. Number three, you're going to want to choose how many shares you're going to buy. So depending on the price, you want to see how many shares you can afford with that certain amount of money that you want to put in towards it. And number 4 is the type of order. So there are two main types that you're going to want to use as a beginner. There is a market order and a limit order. So basically a market order is when you just buy it. You tell the brokerage to buy it for you at any given point. At any given price that it's at that particular moment. So let's say at that moment the stock is $9.97. Well, it's gonna go through at $9.97. However, a limit order, you can put any price you'd like, and it's gonna be under either that price or under. So let's say you put $5. It's either gonna be $5 or under. It will never go over that limit. Now, how to sell? It's pretty much the exact same thing, just that you change the sell as a type instead of buy. And you want to see the number of shares to sell. Basically, the maximum number is the number of shares you have currently. So let's say you have 10 shares, you want to sell 10. You put in 10 there. And then the same thing with the market order and limit order. The market order sells at the exact price that it's at right now. And the limit order is that it sells at the price that you put it at. It will never sell below that price. Now, one major thing to take into consideration is that there are different tax rates depending on how long you keep the stocks for. So now, if you keep the stocks for less than a year, the tax bracket that income falls under is your normal tax bracket as income. So it's seen as being part of your yearly income. However, if you hold it for more than a year, it's taxed at a capital gains of 15%. So basically, the tax bracket that you're in as income will probably be higher than 15%. So it's always advantageous to hold the stocks for more than a year. And that's why you see a lot of people holding it for the long term, not only because it compounds over time and it's more likely to go higher over time, but also because you are saving on the amount of taxes that you're paying. Now, some of the mistakes that some people make and why 90% of people in the markets fail is that, number one, they take out debt to invest. This is something that you should never do. You should never take out debt to invest because nothing is certain and you may lose money in the market. And if you took out debt to invest, well, then you're going to be losing even more money because you're going to have to pay back that debt at an interest rate. So not only are you losing the actual capital, but you're also losing the debt associated with it. Now, number two is investing in non-profitable companies. As a beginner in the market, you should not be even looking at non-profitable companies because these are seen as being much more volatile and much more risky because what this means is that they're not making any profit. So basically, they're losing money when they're operating their business. And in certain situations, more advanced investors will invest in these types of companies for the thought that it will someday grow. However, as a beginner in the markets, you should never even look at these companies. Number three is penny stocks. Don't even mess with penny stocks. These are non-regulated by the SEC, and you should not even pay attention to them at all because they are extremely volatile and they can go to zero at any point. And number four is following the crowd. Now, this is one I want to really focus on to finish off this video. So I want to finish off with like a quote by Warren Buffett, which was, "Be fearful when others are greedy and greedy when others are fearful." So this is a quote that I live by kind of. And just an example of this, of how powerful this is I want to show you guys the graph for Bitcoin in the past 3 months, okay? So in the past 3 months, Bitcoin has gone all the way up to $19,000 US. Now, basically, the reason for this is I was very scared at this point because I saw that everyone, including people that had no idea how the market worked, saw that Bitcoin was being talked about everywhere. Anywhere you turned, any channel you flip to on the TV, they're talking about Bitcoin and how you can make massive amounts of money with Bitcoin. And this is a situation where you do not want to be involved in this particular not stock, but in this particular event, because this doesn't only go for stocks, but also, Bitcoin, everyone was investing in it for absolutely no reason. There's nothing to back it up. And at this point, you have no idea what it's worth, and people are only putting in money towards it as an investment. It shouldn't be an investment because it's seen as being a currency, but people aren't using it as a currency. They're using it as an investment, and this is always a bad sign. So now, as the time went on, we saw it crashing and crashing and crashing, and now it's at a point where it's $8,500. Now, the people that got in at $19,000, they lost a huge amount of money, and these are people that now for the rest of their lives are going to think that the markets are a scam because they've never been in the markets, and the one time that they put in money, because everyone was telling them to put in money and they saw everyone making money out of it, the one time that they put in money towards that particular thing, they lost a crap ton of money, and this is never a good sign, and they will always think that it's a scam just because they got in when others were greedy. And again, as Buffett says, be fearful when others are greedy, and greedy when others are fearful. So when others are fearing that there's a crash coming or something of that sort, that's the time to get in, and that's the time to take advantages of the situation. Alright guys, that's the end of the video. Don't forget to like and subscribe if you did enjoy the video. And until next time, have a great day.